For this video, I want to go over a sample form 5472 for a foreign-owned U.S. disregarded entity. So I've got a number of videos posted covering 5472s with a number of different scenarios. In this example, we're going to look at an LLC that's owned by a foreign corporation, and the purpose of the LLC was to invest in U.S. stocks and bonds. So I've got the 5472 filing here, which we'll go through. It's part of the pro forma 1120, which we'll walk through as well. You need the form 1120 to effectively act as a cover page when you submit the 5472. I've also got a sample set of financial statements here for our investment entity, so we'll walk through some of these items and what actually gets reported on the 5472. And then lastly, I've got two slides here, one covering some background on the 5472 filings and the fact pattern itself. And then the second slide here has a look at the structure chart that's being set up for this LLC. So if we start with the first slide here covering some background, the 5472 with that pro form 1120 is filed on an annual basis, right? And this is filed anytime you have that foreign-owned U.S. LLC that has any reportable transactions during the year. Now, virtually every LLC with a foreign owner is going to have to file this, and that's because the definition of reportable transaction is quite broad. Most LLCs file this because they're disclosing the capital contributions and distributions between the LLC and the owner, and that's what's going to occur in this scenario as well. Now, the LLCs, when you form these LLCs, remember, if you form an LLC with one owner, it's by default a disregarded entity. However, if you have that LLC and you decide to file an entity classification election, so that's 8832, you have the option to elect for it to be taxed as a U.S. corporation. If that happens, then the entity is no longer a disregarded entity, and so the entity would be filing a Form 1120 corporate income tax return, and then it might also still be including the 5472, but what you'll see is the presentation is a little different. Now, in this example, like I said at the start, we're going to cover a scenario where this is an investment entity. So the LLC is not engaged in U.S. trade or business, so it doesn't have any effectively connected income, and so the entity is not going to be paying any income taxes on its net income. Right? Now, in this scenario, the owner of the LLC is not going to be required to file an income tax return, but that Form 5472 filing is still required, which is the subject of this example. And we'll talk a little bit more about those when we look at the structure chart slide, so we get a sense of what might be required under certain circumstances. So if we look at the fact pattern here, we have John Doe is a citizen and a resident of Switzerland. Now, John has a holding company that he set up in the BVI, and that entity is called John Doe Holding Company Limited. And John uses this entity to invest in various projects and investments worldwide, right? So this operates as his initial kind of investment holding company. Now, John wants to branch out a bit more, and he wants to open a U.S. brokerage account and invest in U.S. publicly traded stock. Now, John, as a non-resident, does have the option to open an account in his personal name, but he was advised that it could have some adverse U.S. estate tax consequences. So I won't go into this too much detail now, but I'll put some links below if you want to learn more. But generally, you do not want non-residents to own U.S. situs property because if that person passes away, all of those assets could be subject to U.S. estate taxes. And so we use foreign blocker corporations to try to limit that. And so that's the structure that we're going to have set up here. So the BVI holding company opens a Delaware LLC. 100% of the units are owned by that BVI holding company. And so once that entity is up and running, the BVI entity transfers $400,000 cash to the LLC as a capital contribution. The LLC then invests in various U.S. stocks and bonds. And so during that 2023 calendar year, the entity receives some interest income, dividends, and capital gains transactions on the sale of stock. At the end of the year, the brokerage company sent them a 1042-S, so it's IRS Form 1042-S, which shows the amount of U.S. source dividend income that was paid to the entity, and it also shows the amount of withholding tax that was withheld on those U.S. source dividends. And then lastly here, the LLC made a capital distribution, so an owner's draw of $25,000 to the BVI holding company. So that was money transferred from the LLC to the BVI holdco. All right, so now if we have a look at the structure chart here, try to get a better understanding of what John did to set up here and what kind of filings might or will be required. So we've got John on the left-hand side here. He is, again, a Swiss citizen and resident, so he's not a U.S. person for tax purposes. And he owns 100% of the shares in this BVI entity, John Doe Holding Company Limited. Then as part of this setup, right, the BVI entity opened a Delaware LLC where it owns 100% of the LLC units. So that's not a real investment entity LLC. And then the LLC is the entity that is opening the U.S. brokerage account, and it also opens a U.S. bank account. Now, as far as filings go, John is not required to file a 1040-NR here because the BVI holding company acts as this intermediary corporate blocker entity, right? And so the BVI company, as a corporation, it could file Form 1120-F if it wants to, so it can file that on a protective basis, or in the future, depending on the type of investments that are being put into this entity, it might have to file an 1120-F if there's allocations of U.S. source income that's effectively connected with a business. So an example would be if this entity invested in a partnership in the U.S. that had ordinary income flowing through to it, then maybe the holding company would have to file that 1120-F. Now, another important thing to note, and this mistake is made all the time, when this Delaware LLC is set up and it's opening these accounts, because this is a disregarded entity, it does not complete IRS Form W-9, right? This is a transparent entity, so the appropriate withholding certificate when opening the accounts is the W-8BEN-E for the foreign corporation, right? And so that'll help the U.S. broker and the U.S. bank know exactly who's the beneficial owner here and what taxes need to be withheld, if any. All right, so now let's look at the financial statements, just run through these really quickly. So most of the information here is largely irrelevant for purposes of the 5472. And that's because when you have an entity conducting these types of operations, you're really only disclosing the capital contributions and distributions between the LLC and the entity. You're not having to report any of these other assets or income items. But if we just talk about the income items, because it is kind of important to remember, when we talk about interest income paid to non-residents, most of the time the interest qualifies for that portfolio interest exemption, so there's no withholding tax. But with dividend income that's U.S. source, that's paid to a non-resident corporation, like it is in this case, there's a 30% withholding tax on the dividends, or it could be reduced if there is a relevant tax treaty in place. So we can see here, these are the gross amounts of investment income, and then the expenses down here, the registered agent fees, the filing fees to set up the LLC, some bank fees, other accounting fees, and so on. And then the U.S. income taxes withheld. This is an important one, right? This is 30% of the U.S. source dividend income. And then lastly, the capital gains or losses. It's important to remember that when you trade stocks in the U.S., assuming they're not real estate investments, if you're just trading publicly traded securities, the capital gains and losses are not going to have any U.S. tax exposure. So there's no U.S. withholding taxes, and you as a non-resident don't have to report it and pay income taxes on your net capital gains. So on the asset side, we can see here the capital distribution that came out of $25,000, and then the total capital contributions. That number is the $400,000 in cash that was put into the company, and then the filing fees and the registered agent fees that the BVI entity paid initially. So remember, capital contributions and distributions, or capital contributions rather, those include expenses that the non-resident owner paid on behalf of the LLC. So when the BVI company paid the filing fees and the registered agent fees, that is a capital contribution. So you want to add it to the balance. All right, so now let's have a look at the actual return here. So we've got the 5472 here, but before we get into those details, let's start with the pro forma 1120. So the pro forma 1120, again, it acts as kind of like a cover sheet. The instructions require that we only complete the top section here. So there are 6 pages to the Form 1120. That's kind of like the base Form 1120. But you really only have to complete this top section. So you are supposed to put foreign-owned USDE at the top. We have indicated that the entity was set up August 15th. And so we've got August 15th incorporation date. And it's for the short period, August 15th through the end of the year, because it's not a full calendar year. Name of the LLC, not a real investment entity LLC, and the EIN assigned to the company. And then we've checked the box for an initial return. Now, the next section that you could complete, but it's optional, is Schedule K. So this just provides more information on the entity, but again, it's not required per the instructions, but I have, and I've seen other preparers consistently just populate this just for completeness purposes. So we can see the type of business activity. It's a portfolio investment company. And then at the end of the year here, we've indicated the ownership, right? So we have foreign ownership directly held by a foreign corporation, and then individual indirectly holds the corporate stock. And so we've put that information all on Schedule G, which is attached behind this form. So we'll look at that in a few pages here. And then in question 7 here, did at any time any person own directly or indirectly 25% of the stock or more? And the answer is yes, right? So we're 100% own the owner, the BVI, so British Virgin Islands, and we are attaching 15472. And then this page 5 of the return, Schedule K, continued, answer yes or no, as appropriate, but again, it's not necessarily required that you complete those questions. Balance sheet doesn't have to be completed. M1 or M2 doesn't have to be completed. Schedule G, we have the information on the entity owning the corporate stock. So the 100% owner here is John Doe Holding Company Limited. It's a corporation set up in the BVI, and it owns 100% of the stock. And the EIN, the company does not have its own EIN, and that's okay for these circumstances, so you can put foreign U.S. as a placeholder. And then in Part 2, individuals owning the stock. This, again, it applies to individuals that directly own the stock or indirectly own the stock. In this case, John Doe does own 100%, but it's indirectly through that BVI holding company. So we do have John Doe owning 100%. He's a citizen of Switzerland. And John, again, doesn't have his own ITIN or SSN, so we can use foreign U.S. as a placeholder. Now, on to the 5472, the information on the reporting corporation. This is the LLC, so we have not a real investment entity LLC, company name, and the EIN, and then mailing address. The principal business activities, portfolio investments, and the principal activity code is what we looked up in the form instructions. Now in lines 1F through 1H here, the total value of gross payments made or received that are being reported, these are the reportable transactions. So the reportable transactions, if you recall, we had $400,159 of contribution, so money put into the company by the foreign owner, and then a $25,000 draw as a distribution. So the total reportable transactions is $425,159. So that's what we're going to be reporting here, and we only have one 5472, so that total is the same. 1J, it is an initial year return. We are only doing one Part 8 because we only have one Part 5472, and the country of incorporation for the LLC is the U.S. Now, where the LLC kind of conducts its business, because it's a disregarded entity and it's a portfolio investment company, it's appropriate to simply say that it's a resident of the BVI, right? It's not a U.S. resident filing U.S. income taxes or income tax return as a resident. So BVI is where business is conducted. And then questions 2 and 3, we've marked off yes, given the foreign ownership, and then given that it is a foreign-owned domestic disregarded entity for purposes of Section 6038 Cap A. Information on the foreign shareholder in Part 2. So this is where we have the direct foreign shareholder. So remember the structure chart here. The direct shareholder in this entity is the holding company in BVI, and then the indirect owner is John Doe, who's a Swiss citizen and resident. Right, so we've got John Doe Holding Company Limited as the direct foreign shareholder. We've got the address down in Tortola. Again, no U.S. tax ID number, so foreign U.S. is the placeholder. And then principal activities and country of incorporation and residence, all BVI. All right. Then in 6A, we have the option here to enter the name and address of the ultimate indirect shareholder. So the indirect shareholder here being John Doe, right? So John Doe, citizen and resident of Switzerland. We've got his address here in Zurich. Principal country where business is conducted, country of citizenship, or countries under whose laws he files an income tax return, all Switzerland, right? Now, Part 3, related party. We've indicated that this is a foreign person, right? And this is where you typically report the owner. So John Doe Holding Company as the direct owner is the foreign person, and it's a related party. U.S. ID number, again, foreign U.S. We've added a reference ID number for the holding company, and then the principal activities, investments, and then we have the principal business activity code. Now, the relationship between this related party and the LLC is that it is a 25% or greater foreign shareholder, and then we have BVI as the principal countries where business is conducted and where they would file an income tax return as a resident. Now, Part 4 is blank, and it's blank under these circumstances, but you could have entries here depending on whether you're engaged in U.S. trade or business, and you actually have some income or expenses that are going into computing your taxable income in the U.S. Part 4 is used if you have transactions going between that LLC and the foreign related party, and they're used in computing your taxable income for U.S. income tax purposes. In this case, the entity is not filing an income tax return to report taxable income and pay income taxes, right? We're only needing to report the reportable transactions that are capital contributions and distributions between the LLC and the owner. I do have an example where you would see a situation where you would complete Part 4. There would be some numbers. So again, I'll put all those links below. It's the Form 5472 that includes a 1040 NR filing. So if you want to see a scenario where that would apply, go ahead and check out that video. Now, Part 5 and Part 6, this is where we report those capital contributions and distributions. So that's done here in Part 5. And so we've attached a statement. I'll come back to this page. Let's go to the statement first. So we can see here, statement, we've included this following narrative here, right? Not a real investment entity LLC. The company is a foreign-owned single-member LLC that is a disregarded entity. Company is an investment holding company which invests in U.S. publicly traded securities. The company is not engaged in U.S. trade or business. The company is filing this to disclose the capital contributions and distributions between the sole foreign member. The capital contributions and distributions between the company and the sole foreign member are as follows. And so we've got our contributions of $400,159 and the distributions of $25K. And then in Part 6, so Part 6 asks that we describe any non-monetary or less than full consideration transactions between the reporting corp, so the LLC, and the foreign related party. I'd like to highlight just as a note here that the company's sole foreign member, if this is the case, is serving as the managing member of the LLC. So that suggests that the foreign member is doing something to run and manage the LLC. They're simply not just a mere passive owner or investor. And so Part 7 8 and 9, generally these won't apply for foreign-owned disregarded LLCs that aren't paying any tax in the U.S., right? If they're just reporting the capital contributions and distributions, you won't have a lot of these elements. So in this case, you just read each question, answer it accordingly, and then if it directs you to do something different, then do so. But in our case, none of these apply. So we don't have any cost-sharing arrangements. We're not importing any goods from foreign-related parties, right? We don't have any loans between the LLC and foreign-related parties, so all of these don't apply. All right, so that covers it for this tutorial. I hope this was helpful. Again, I would encourage you to check out some of the other videos I've done covering some different scenarios. Obviously not every scenario or rule would apply to every set of circumstances, so always best to consult with a professional and just discuss your unique facts and circumstances. And so that covers it. Hope that was helpful again, and I look forward to seeing you again on the next video. Thank you.